Can we not hear him? We can hear him. Okay. My bad. My bad. Go ahead.
No, you're supposed to share what on YouTube? The earnings?
Boom. Zoom.
Oh, this. Yeah, no, that's it. Just highlighting a couple of those. Palo Alto is looks like Tuesday. Um, so still more tech earnings next week to be can certainly keep holding QQQ up.
Damn. All these damn earnings.
Mm-hmm.
What the hell? All right, so we're streaming now live on YouTube. That's what I wanted to do. I didn't mean to cut you. My bad. I was over here talking to myself, to be honest.
No, it's good. We can transition into special topic,
Um, well,
which is talking about FOMO and patience.
okay. You want to you can go, Talisha.
Yeah, I can kick it off. All right. So, Jordan, if you're on, thank you, Jordan. You had lots of really good questions that we're going to start dissecting starting today and then just going over the next few weeks on all kind of stuff, fib, stop loss, emotions, psychology. I mean, it was a really good list of questions. And so today we thought we would go over talking about the psychology part in the mind, specifically about patience and FOMO. So one of the biggest misconceptions, and the way we'll do this is we'll kind of just share each of our perspectives and experience, and then we'll open it up for some live Q&A if you have specific questions. But for me, FOMO is one of the things I have to work on the most. And it's because I think in general, as traders, we have the misconception that more is more. And it's one of the few areas in life, I mean, really a lot of areas in life are like this, but it's one of the ones that highlight it the most where less is really more. And so we have the idea that like more tickers equals more money. If we make money with, Dell because it ran up, it's going to be better money than if we make it with consistently trading, I don't know, Fire QQQ. If we make it with a big name, if we catch the bottom or the top, we're somehow some kind of hero. There's a lot of ego involved in it. And so we have all these like emotions tied around what trading means. And the reality is a lot of us have our identity tied to it. We have our value is tied to if we profited that day. Our personal value is tied to if we caught a top or a bottom, or if we found the one stock that nobody was looking at and it happened to, hold on one second. Dylan, can you get your brother? Or we found the one stock that nobody was looking at that happened to run, right? And so we tend to have a lot of our identity tied to that. And that's what makes the emotional side the hardest, is because we are too closely tied to our worth and our value as a trader and the result. And the more that I could take a step back and realize that I am playing a game of probability. So it doesn't matter sorry, my kid's in the background. Hold on one second.
It's all good. That's regular. No regular.
Virgil, what up, my bro?
Shock.
But the more that we can understand that trading is about probability, right? So we could have, and I'll speak for myself, I could have the most thorough analysis, right? I could have the most accurate levels. I can have the most, I could have just the most thorough analysis and still the probability not be in my favor, right? Because we're playing a game of probabilities. And sometimes we think that we're playing a game based on our intelligence, right? And the market will really humble you quickly by thinking you can outsmart the market, right? And so the more we can put parameters around understanding the game that we're playing, understanding the rules to this game, and then playing within those parameters, it starts to strip away some of those emotions tied to FOMO and not having patience. Like I was looking at, a great example was I was looking at SPY yesterday, and I shared I missed my entry doing something I wasn't supposed to be doing. messing around with Meta. And so that we price ran, I'm like, that was a really good entry. Bounced off the VWAP, we retested it. That was beautiful. And I was so pissed about missing that entry that I forgot my own, like what I've documented and what I've been catching data on, that it's going to come back for me. It's going to come back and retest and stop out everyone that chased that move. And so at 10:10, that move happened. At 10:35, like my A plus setup showed up, but I was so in my emotions, I couldn't even catch that one. Right. And so I think it's something that's like a daily reminder of, as much as we want to think we're in control, we can't control the market outcome. And the more we can stay in the mindset of we're playing a game of probabilities, the more it takes away the feeling of FOMO, because you're like, probability is something's going to be running all the time, right? That's the probability of the market. Something's going to be running. So if I miss this, I have a really, really good chance to find something else if I can keep it in that perspective. But if I miss this and I'm stuck in thinking about how much I missed this, and I'm stuck in thinking about how much, man, I wasn't in that run, I wasn't in there, I wish I would have, should have, could have, would have, then we don't have the foresight to think about something else, because all of our emotional capital is tied to what we could have been doing. And so one of the biggest lessons I've learned is to separate my identity as a trader from the results of my trade. Right now, to some extent, you want to measure that, you want to capture data, and if you're losing every trade, that's a problem, right? But at the same time, like I said earlier, you could have a really good analysis and still lose the trade, right? Because again, we're in this game of probabilities, and we lose sight of that, and we want to out. Sometimes I think we outsmart ourselves. Like, we think we're smarter than the market. We think we can find a hack. We think we can find a shortcut. We think we can do all these things. So we over engineer a system that is very savvy and smart on paper, but isn't profitable because it's so over engineered, and we're so caught in being right, we lose sight of being profitable. Right. And so for me, having that framework of, I want to be right because it feels good, but at the end of the day, I don't care about being right. I care about being profitable as I'm playing this game. And so the distinction is, if I'm wrong, I cut my losses quick. I'm not sitting in there trying to hope I'm going to be right. Right. I manage my risk so that I can capitalize on the outcome I'm looking for in a way that's not going to blow my account if the direction is wrong. Right. And I continue to remind myself, like, when it comes to the market, I'm not trying to outsmart the market. I'm trying to be on the right side of the market, and that's it. Right. So I don't care if we have like I've been moving since March 30th, and as frustrating as it is to look back and be like, oh, dang, that was such a huge run. The reality is there wasn't an entry. My model didn't show up to catch that run. I would have just been popping in. There was no retracement. There was no retest to hop in and prove we were going to keep going, right? And so it's just having really clear rules around how you define yourself as a trader, what your trading plan is, and then understanding that at the end of the day, there's going to be something that's running everywhere. And the highest probability of winning at this game is by doing the same thing consistently over time, as opposed to trying to chase everything all the time, right? And so it really is one of those aspects where less is more. Have few tickers you watch regularly and you know them very well. Have a few setups that you trade. Have a few influencers that you follow. Don't follow everybody, because it just contributes to your FOMO. People don't show you the journey. They just show you the outcome, right? And so if you're following someone that's only posting wins and only posting like these insane returns, it's just going to fuel that FOMO and make you feel like you're missing something, right? So I'll pause there and see if you, Ab, or Rams have anything to add or share your
No,
thoughts.
I'll add to the patience and FOMO. I mean, with the way I see patience and fear of missing out, like you guys very well know, like I always use the boxing analogies and the fighter and the because it it's so linked, the structure of the prize fighter, right? Like, so put my drink down.
Oh
So
shit.
when you want to look at something, right? I look at it as a prize fighter perspective because the green fighter still flinches. He's still he's still scared. He still doesn't know how to catch a punch to give some. He doesn't know how to range bait, right? He doesn't know that it might take for you to get hit 2 times for you to come back with your work, right? So a green fighter, he sees, oh, I got hit, I gotta hit back, right? But a seasoned fighter waits for that opening. I might bait you and put my face there. I'm gonna wait for you to get to this level. When you get to my level, when you are in my range, right where I can hit you, but I know you're not gonna be able to hit me. That's when I'm going to counter and strike. Right? Same thing. The chart comes down to your level. That is your range. That your opponent is inching in. That's where you can hit him, but he can't touch you because you were waiting at that reaction zone, right? As soon as he touches you, you see the reaction, bang, bang, bang. You win and you get out. What does getting out mean? I'm gonna put my stop loss, right? I'm already in guard, built-in defense. I could go 1, 2, block, boom, come back with another right hand, right? Because I have built-in defense. So if I get into play, I got my stop loss right here. As soon as I see him coming, all right, cool. As soon as he throw that, I'm gonna go ping, boom, bang. I'm pivoting this way, and as soon as he look at me, I'm coming with a right hand, right? So that could either be a break or retest. I see you in my zone, I'm striking, ping, pong. I'm gonna hit you with the 1, 2, and I'm going to my stop loss. I'm chilling. You can't touch me. So that is your patience, right? That is you controlling that FOMO where I see that he keeps attacking me and I don't got no open range. Let me just swing wild and hope for the best, right? That's FOMO because he hit me. I'm fearful that if he hits me again, I don't get to hit him. It's okay. I invite you. Come hit me because eventually you're gonna get tired. I see the long game. There's a week. There's 5 days in 1 week, right? So okay, just because we coming down and it's only Monday, Tuesday, bro, we in round 1 and 2 and 3. We gonna see how you acting when we in round 5 and round 6, 7. Once we in the deep water, I already saw my entry. I already been working you. I let you spend yourself. Stellar exhaustion right at your level. You exhausted yourself by bang, bang, boom, boom. You just going off. You trying to knock me out, bro. I'm fresh as you fresh. It's the beginning of the fight. You gotta be different and knock me out in the first round. I'm as fresh as you, right? So if I can be patient enough for that opening, if I can see, all right, the stellars are getting exhausted. I see the absorption going on. Here's what I got you tired. I got you in deep waters. I see the mean reversion now, right? The rubber band went too far. It's got to snap back. So that's what I got on patience and FOMO. I mean, it's on the individual. Now, at the same time, if you're a person that, let's say, right now you're still developing your trading character, right? Your trading personality. You wanna take safer plays. Give yourself 2 weeks. Give yourself a 30-day expiration date to see the play out. Even if you're willing to day trade, it doesn't matter because that will lower the tone on the FOMO and on the patience. Because if you got a 5 day and yo, damn, this thing just came down 7 points. What am I gonna do? I only got such and such days. I gotta either leave by tomorrow, and if tomorrow come down more, I'm even more than draw. So you can't even let your thesis play out without the emotion because you're gonna be in your chair rocking like, nah, I'm not even. Forget the stop loss. Remember what T was telling us last week? How she was teaching us. You got your stop loss. You got your first take profit zone. Anything in between is noise. But because you give yourself that little bit, because you're still learning who you are as a trader slash investor, you're giving yourself a small window and now you have to react where you don't know how you react there yet. I'm not gonna take your strongest punch. I gotta see how your jab is coming. I might want to test it. I'm gonna just put the guard up, get close to you, and see. I want to see where the strength might be, right? But I'm not just gonna be like, let me test the strength. Let me keep my hand. Boom. Now I'm going to sleep, right? So I want to be very strategic with my patience, right? FOMO can get you put to sleep. Oh, damn, the run is going. Oh, my song keeps going. Let me boom chase him before you know it is at 650. A reload zone. I'm just saying, don't quote me on that number, so don't hop in on. I'm just it's an example. So let's say it's at 650 as an example. Is at a perfect reload structure point, or you was buying in the 9 or whatever, and then now you're in this drawdown because you was chasing the move when you yourself saw, damn, yo, if it come back to 680, 650, I'm in there. But you the FOMO, yo, $100, Intel, 100, this one, 200, SanDisk from 20 to 1,000 something. So now you're like, yo, I need a piece. But the moment it's like how everything, the moment you get a piece, everything crumbles, right? So you gotta the patience and the FOMO is bread and butter in this game. It's the most important piece of everyone's strategy because in everybody's strategy, you will go through FOMO and your patience will be tested, right? When I get hit hard, that's the perfect patient tester right there. Damn, what am I doing? Don't worry about it. I'm gonna make you forget that you did that. And by next round, I'm gonna come in hot. And I ain't even go head hunt. I'm gonna come to the body, right? I'm gonna get you in pain first. So this is how you want to think about the market. Okay, I got a reload zone here, but I will add to this play because it's fresh. If we get to this next level of structure, because I know if we lose this, my play gets invalidated right here. I'm gone. But you know, because your add-on was down here, you added, you got your feet wet. It comes to this point. This is why I add the most of my bulk. I'm not gonna add on a run up. I can't do that, right? Unless I add and it comes right back to where the floor was made. Okay, it gave me a chance to reload. It didn't just go without me. And I know institutions are parking here. That's something else. But when you're scaling in, right? You want to scale in. If it loses this level, I already know things are gonna get dark. So I'm gone. There's no FOMO. There's no emotion, right? There's no being impatient. Well, I already bought here, and like okay, like Netflix, right? Everybody knows I bought some shares, and I said I was gonna buy again at this level and at this level. Those levels haven't hit, and just because I saw it at 90, I'm not gonna chase Netflix on shit. I said I'm gonna buy them when I see what I see. If I don't see what I see, I'm gonna leave it alone. I see Netflix coming at 82 to 78. That's a beautiful zone. Don't let me catch her at 72. But that's patience and FOMO from my perspective. It's not that you have to really find out what your performance under pressure is, because if your performance under pressure, if you're gonna flinch at every move that the market throws at you, you should give yourself more grace on the contract. So that way, whatever the market throws at you, bro, I'm not even in your range. Do what you want to do with them contracts during this week, because my move could happen next week and I'm still happy, right? So that's all I got for that. I hope it was good. I don't know if it translated well, but
Damn, that was
That was
good, bro.
so good. That was
Okay.
so good.
That was amazing, bro. Look at the comments.
Yeah, that
Word.
was good.
Yeah, that was good, bro. That was fire, bro.
Word.
That's the stuff.
Yeah. That's man, that was amazing. You
I
know,
appreciate you guys for real.
I
now
think it's worth noting too, Lo, that that's why Rams's hit rate is so high,
Mhm.
because he's waiting for the specific move. He's not chasing a bunch of stuff trying to see what works. It's the whole sniper concept. You know, it's like literally mapping out the plan. Like most of the work Ram, I just because I know his trade style, it's like once he pulls the trigger, all the work has already been done. So it's just a matter of pushing a button, literally at that point, right? And it's like that's why he's able to have such a high hit rate because it's like the work's already been done. I just push the button at this point, and it seems easy because he's done all the work already. And it's just a beautiful analogy with boxing on how to, wait for those punches and then know when to get in.
That's a fact. All right. Yeah, that was amazing. Both of y'all. I love that. Patience is my favorite topic. Patience and FOMO. Y'all did so amazing. Y'all put so much pressure on me. Um, y'all just no, seriously, that was really good. Now I just gotta freestyle it. Patience for me, boxing. It's like that. Rams, that was so dope, bro. Um, for me, patience for one, how you look at the market, how you view the market. The way I view the market is different from majority of people. Most people view the market as a place to make money. Me, I'm just stuck like on I guess it's me learning. I'm really like a deep diver researching. So I understand that the market was made the first currency besides the fiat coin was the human. So I understand off the rip the market is about the mind. So I understand if I don't know much about my mind or how the mind operates in general, I have a major disadvantage from everyone. So that's my advantage versus like a lot of people is the mind. So you can't be an arrogant person. You could be extremely confident, but you can't be cocky to the point where you're blind because once you're that cocky, you don't understand that everything. So if you're cocky in general outside of the market, that's going to translate into the market because the market is a mirror of you. So once you understand that, that changes everything. So I know that everything I do in life has to be how I move in the market. I can't chase no stock. I have to be positioned and let it sit and come to me. Just like outside of here, what women or anything, you don't chase, you have to attract. So really it's how disciplined are you? Are you able to just sit there and be calm? I'm able to sit in a group. I'm able to sit outside with like a. It could be noisy as hell outside, but I master my energy to a point where I could find myself and be able to have my inner thoughts while being outside where it's noisy and chaos. So when I'm in the market, I'm able to sit through trades that's down a lot or that's going against me as soon as I get in. But when that happened to a lot of people, once it goes against you, you automatically just react and you don't think and you just get out. So it's honestly how if your life is like honestly, I gotta just touch up on the point. How is your life? What's your life like? If your life is just in shambles and you're going through so much, you're not gonna be successful in trading right now until you get it straight. And that's one thing that I had to learn when I was going through a lot and stuff. I wasn't I made my trading process last longer than I mean not last long, but I made my trading process longer than what it should have been because I was trying to trade with going through I was having a war in my mind and just going through a lot. So I wasn't calm at all. So as soon as I come in the market, I'm expecting to hit, and when I don't hit, I'm upset, and now I get emotional. Now I start revenge trading, and I stay in way longer than I'm supposed to, and stuff. So it's very, very simple yet very difficult. It's just all about, and this is why I stress this so much. If people, I'm telling you, if we was to, how can I put this? If we was to sit there and me, Rance, Talisha, and whoever else put down our strategies and stuff like that and say there was a contest, I already know how to beat everybody else. It's the whole thing is meditating, but we all meditate in different ways. You have to bring your blood pressure down and be extremely calm. You have to be able to think real good. And then long like Ram said, durability. Like I'm in it for the long run. I'm not in it to make quick money. If it comes, it comes. But I'm willing
Mhm.
to take losses a lot because I'm managing my risk. And
Mhm.
I know if I rush something, I'm gonna get my head cracked. Or if I try to go like you, it's all about knowing who you are. I know who I was, so like I know outside of here, I know what position I was in. I know who I was. I know I wasn't. I know what I would do and what I wouldn't do. Put it like that. Like certain things for everybody. I ain't the type to sell drugs and stuff, but if I'm hungry, I'm hungry. And what does a person do when they're hungry? So I know what things that I could do and things that I couldn't do. When I try to jump in and start doing stuff that I'm not supposed to, I get smoked. I get spanked. The same with the market. If you try to go from you're used to trading SPY, but now you're trying to go to freaking a whole different sector. Like I can't even think of something, but like CRM or something. It's totally different. You got to understand the market. You got to understand what you're trading, but more so is being patient, just being calm, meditating. I honestly, it's so simple. I don't have really that much to dig in. It's such a simple thing. I think we just overcomplicate it. It's just being calm. Really, if I think about it from my state, I just I just try to be calm. And the candles, I don't really see the candles. I see them moving, but I don't I don't know how to put it. I think we wrap around on the intraday level instead of looking on higher time frames. So when it starts moving fast, you're going to panic and do stuff you're not supposed to. But really, if you're calm and not going through that much outside your life, you should be calm. And if you already went into the trade like willing to lose the money, there's no reason why you should panic anyway. Most of us, I think we're playing with money that we shouldn't necessarily be playing with. And I think that's why some people react the way they do because the money that they're because if you're anyway, money is money, you shouldn't be like emotional with money anyway. So if you're like that outside of life, you're gonna get smoked in the market because any type of money that you throw in the market, you should automatically think I'm gonna lose it. But once you come in the market, you're like, man, like I hope this hit. And if it don't hit and stuff, then you just got a whole bunch of things that go through your mind and stuff. And then the way you talk to yourself is the most important thing. Talk to yourself. I talk to myself. I don't care how people, if y'all think I'm crazy, I'm glad I'm not normal. To me, being normal is weird as hell. I want to be abnormal. I don't want to be like everybody else. I want to be different from you see when I did Rams. I like your hat too. I want to be different from everybody else. I don't want to be the same as everyone else. I think that's another thing that separates me. I don't want to be like I want to be like if I'm on a Zoom. If I'm thinking about um you know, Kiki, I gotta text you. So I'm thinking like, damn, where was I? I don't, damn, where was I? Help me real quick. Fuck, damn, my pain.
You were just talking about not following the norm, basically.
All right, so yeah, I don't want to follow the norm, and what the reason why I said that I want to talk to myself when I'm in a trade, but I want to watch how I talk to myself. A lot of times when we lose trades, we get frustrated. I when I lose trades, you see, I put gifs and stuff like that, but that's literally those gifs is literally how I am though. Like I might
Mhm.
post a Malcolm X thing, me like slamming my hand or the girl like screaming and stuff like that. It's just to let that out. But I don't really feel like that though. I don't care if I lose. That's if I lose, it's all right because I took so many losses. I understand that it's gonna come
Mhm.
with it. But when I hit, it's gonna make up for the losses. So
Mhm.
you gotta be willing to accept that losses is gonna be is a thing.
Mhm.
That you're gonna lose more than you win. You gotta be able to accept that impatience is going to get you hurt. Being impatient is going to get you hurt, and not being disciplined is going to get you hurt. It's like I don't have much to say about this because if you don't understand how you're supposed to be outside the market, then how do you think you're going to come in the market and do your thing? So that's the whole thing is just psychology. That's all it is. It's super, super, super easy. Just manifesting. All this shit is so true. Meditating. You see, I put the music on. Sometimes I might read. Some like at nighttime, I got like red lights, blue. You got to know what your lights do. It's so much that goes along with this shit. It's mind boggling. It's just all about the mind. That's really it. Just I don't. So I the fear miss. I that's no. It's not being. It's not even about being built different. I know that when I come in the play, I already accepted that this play is gonna. I'm not in control. Like Talisha said, I'm not in control of
Mhm.
the play. So once I press enter and I'm in that contract, I don't care what happens.
Right.
That's one thing. I separate my emotions completely from that contract. The only time where I feel a little emotion is if I know somebody like y'all are following me. That's it.
Mhm.
When it's just me in that trade, I don't give a damn.
Mhm.
Like if I because I
Mhm.
done been in trades where I 2 months straight, no profit. I understand
Mhm.
it. I've been through it already. So I
Mhm.
know how it is. So it's more so just stop expecting yourself to win. Stop thinking 80% hit ratios is fucking normal. Now I gotta cuss. Sorry.
Yeah.
Stop thinking that's normal. Take that out your head and just understand that your best professional traders are hitting 45 to 65. Like nothing crazy. That 80, 90%,
Mhm.
I don't want to say impossible, but impossible. And just understand that when you start feeling yourself shaking and stuff like that, then that's fear entering you. You got to let faith take over. So it's just spiritualness and all of that is wrapped together. That's what makes me good. I don't have no fear outside the market or in the market. It's just faith. Everything I put into God hands. Even when people say, "Oh, you shouldn't be praying about the," I'm going to pray about this green candle. Thank you. All praise is due to Allah. Thank you for that big green candle. I don't care what nobody say. Like I pray on my place. Like why I mean why shouldn't I? You're supposed to pray about everything. So yeah, please bless me with this big green engulfing candle. Oh, thank you, Allah, for this doji right here. All that. So yeah, that's it. That's all I really got. But it's just about just connecting outside with the market. How is your life outside the market, really? You just got to think about mastering your energy, just being like level headed, like floating basically. No emotion. That's like it's impossible really to have no emotions, but when you're not connected to money, it's not impossible. So that's it. All I got with that is just knowing yourself, really.
Mhm.
And I'll add just a couple of like,
Yeah,
um,
yeah, I did really
just
good on that.
practical things. Like when it comes to, so we talked about, when you have your, you have your entry, when you have a trade plan, you have your entry, your stop loss, and your take profit. And like Ram hit on, literally anything between those three levels is your emotion. So that's the first thing, right? Is a lot of people aren't going into the market with a trade plan. You're just hopping in and hoping
Mm,
for the best. And so
Mhm.
emotions take over because there's no plan. But when you have your
Mhm.
levels fit, for me, even if the only time I will get out of a trade early, even if I'm in a loss, is if my structure breaks or my stop loss hits. I'll take the loss because it's training me to be disciplined in my trade.
mhm,
So if I see the trade's not going in my favor and it's close to my stop loss, I'm not cutting that. I'm not cutting the play. I'm letting my stop loss trigger, or if I see structure break, that's different. But I'm
Mhm.
letting my stop loss trigger, or I'm letting my take profit trigger, and it just forces me to be more disciplined in the trades I do pick. But then also, I think a big part of it is being over leveraged, like Ab talked on, is going into a trade feeling 100% okay if you lose everything you put into that trade. And if you're not 100% okay with that, then you might be over leveraged,
Yeah.
right? Because it is a game of probability. So even with the best analysis, the best guru, the best whatever, you can still lose the trade. I've had times where my brokerage has frozen or glitched and I can't even close my trade out. And luckily, because I manage my risk, that I couldn't get out of the trade in time or whatever. And, it went south. I've had that happen, things out of our control. So imagine if I was way over leveraged and that happened. That's the other thing. And the third thing I wanted to share was, I see your comment, Lakia, about the fear of loss. And it's a lot of times in the market, we grieve over money we don't have. Like the money is not ours. When we have unrealized gains in something, that's not our money. It's not ours until we hit the button and it's realized, right? And I see this come up a lot when I'm talking to folks about like leaving runners. And sometimes I'll have my runners once I get down and I have like one runner left or something, and that might be at 100%. And I'm okay with it might maybe a 70%. I'm like, anyway, I'm okay with losing that runner for the sake of what the potential gain could be, because that money's not mine anyway. I've already taken profit. That's just a risk-free, let's see what happens, lotto, basically. I have no risk on the table. I've taken profit off already. I'm okay if that comes down from 100% to 30%. I'm okay with that because I've already worked my plan. This is all extra now. And I think a lot of times we get upset about money that's not even ours. We haven't even made the money yet. We haven't even realized the gain, right? And so we get emotionally attached to unrealized gains. And then we feel like we lost something that was never even ours to begin with. And it goes back to your trade plan. Even with leaps and swings, you should be having a TP1, a TP2. When am I going to get out of this trade and start realizing some profit? And actually seeing the fruit of some of the work. And then the other piece of that is, I think one thing that gets overlooked a lot is the goal of trading isn't to grow. And I've heard this from a mentor of mine. The goal of trading isn't to grow our brokerage account. It's to grow our bank account, right? And so it's important to pay yourself out, transfer money out of your brokerage. If you're day trading for income, it's important to transfer money out of your brokerage. Put it in your bank account. Start to experience the increase that you're working so hard for, right? And I think the making some of those dots connect stronger can help also with like the FOMO. Like when I'm in a trade and it's running and I'm like, that's not my money yet. So what am I afraid of losing? It's not even mine. How can I lose it? Right? All I can lose is what I put in the trade. So those are my additional thoughts on what we shared.
Do y'all have any questions on that? Y'all could take yourself off mic and say something. I just want to tell y'all that we all have the capability to be the best traders. None of us are like everything that we do as far as the technical point, we can all do the same. Like I could do anything that Talisha Rams, if I want to do it, I could learn everything that they could do is like Rams with the volume and Talisha with the ICT. If I want to, I could lock in and learn everything that they could do within a few weeks or a few months, depending on how much I want it. But just understand that confident for me, I'm gonna give y'all a checklist. Confidence is the number one thing on my checklist first. I would say confidence, and then, or I got to put faith first. Actually, faith, and then confidence, and then conviction. But that's the same with confidence, really. Um, it's I think a lot of us aren't confident in ourselves and our trades. So sometimes you might do something, and one thing that I hate, that I don't even like the word hate, but I hate is when people be like, "Oh, I'm so dumb." That little thing that you just said just sparks something that's going to be with you forever. That is the worst thing that you could tell yourself outside the market and in the market. You're not dumb. You got to really be careful what you say to yourself. And like me and Talisha was just saying, like money is energy. Well, money is literally energy. so connected with it. It's okay to take a loss. It's going to happen. It's like when you're angry, it's okay. I tell myself it's okay to be angry. It's just how long was you angry for? So with the loss, it's okay to be down because of how long are you going to be down for though? Nobody's going to come get you out that hole. So it's just it's so much of a mental battle. It's not about technicals. If I could do this over, it'll be psychology first, risk management second, trading third. Like that's the last thing that I will learn will be trading. But that's the good thing when you go through mad shit in life. You could be good, you could be exposed, or you could be really good. But you should have that armor or whatever. Y'all got to take what you got outside of here and put it in here. Remain calm and just be so patient and just believe in yourself. Trust yourself. Trust that there's no such thing as a smart money. You could do nobody's smarter than you. So that's stop saying that. It's big money. Just understand and believe in yourself, trust in yourself. You are the I tell myself all the time I'm the best. And I literally believe that I'm the best. I don't think nobody could fuck with me with this trading shit. But y'all might think different, but that's okay. I want you to think different. Like, and then when I see like, oh shit, like I use things like it's times where I seen some people do some things like Rams hit 200 something percent on his contract. I'm like, shit, he making me want to go back in the lab. Like I use that like, oh shit, like hold on, like friendly competition. Like that's like if Ab always popping his shit, I show him. Let me show him that I can hit support and resistance better than him. Like it's just like friendly games though, but don't let it mess you up. Like when you don't, because you're not gonna touch me. So when you don't let it be like, damn, like just be like, nah. Like just keep grinding, bro. Like cause ain't no I'm telling you, you just gotta really want that shit. Really want it, really want it, really want it, and really believe that you are the best because you literally are the best. Y'all don't understand the the mind is the strongest thing on this face of the planet. Y'all don't understand how powerful the mind is. Once you understand like 30% of it, you're gonna tap into everything. I think I'm so good at trading just because of my mind and just because I believe in the law of assumption, the law of attraction, and my belief in how like everything I put into a law's hand. I think that's what honestly makes me like such a good trader. But that's all I want to touch on. But just having that faith, that higher power, he controls everything, or she controls. We don't know if it's a he or she. God controls everything, and I put it all in the hands, and I really believe that that he's gonna if it's meant for me, it's gonna happen. If it's not meant for me, it's not gonna happen. So it's just faith, man, faith, patience, confidence, really. Tie God with the market, man. I don't know why we think that shit is like we think like money sitting at the table talking about money. We think these things is evil. That's because they want us to, but tie God with the market. I'm telling you, it's going to change your trading strategies. Tie it.
Can I just one thing to my journey specifically when it comes to FOMO is my poverty mindset. Growing up, certain mindset caused me to deal with FOMO in different ways. And truthfully, you don't realize how locked in you are into those beliefs and they show up. It's really been a struggle for me, and I've been working on it super, super hard lately, but I feel a lot more calmer in my trades because of the work I've been doing. But poverty mindset is no joke. It's
love that
for me. So.
That's right.
Nisi, can I just say thank you for sharing? Because that's really where I was going when I say that fear of loss. I know that a lot of people struggle with that poverty mindset. And so when you're putting your money into the market, even though the unrealized gains, I think, is a whole separate issue. But when you're just putting your money into the market, it's difficult for a lot of people to release that and have that freedom and that disconnect from money. So thank you for sharing that.
Yeah, that was good. And even to add on the FOMO, if you think about it, right? I'm gonna use a MU or SanDisk, whichever one you want to put in your mind as I say it, right? But when you're chasing something because you fear of missing out on the move, the ironic thing is that you're actually missing out on a different setup that's actually going to get you that actual reward, because by you chasing the top, chances are you're going to be in drawdown in the next day or two. But by you fearing missing out that move that's just been rocketing, you actually, what you did was miss out on a perfect A+ setup, but you didn't want to look at it because you was looking at the rocket fuel just going, 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 and you try to chase and hop in. So by FOMOing, you actually missing out.
Stay on that. That's stay on that. Talisha touched on it. You just touched on it. Right there is what Rams just said. Is like Talisha was saying about being in. Like we always just looking. Like for me, I used to listen to so many people because I'm just trying to find that perfect thing. So we like Rams just put it with the stocks. Just we try to be in every single thing that's popping off and stuff. We got to start understanding that less is better than more.
Mm-hmm.
So that's why I was saying stay on that flow with that. That's real good. I think that's another thing, but besides the poverty mindset, because again that leads off of your outside life. That's something that none of us could fix. Like nobody, I don't care what nobody say. Even them people that go to school and get them silly. Sorry, my apologies. That get them certificates that call themselves psychologists and all them that whatever. So those I don't even think they could fix a person's mind. Only you can fix your mind. That's I don't think nobody else could freaking fix your mind. Only you truly can. Only you truly could. It's about going inside and just rewiring everything. It's called the paradigm shift, and I'm gonna always say it. Replacing a multitude of bad habits with positive habits. And you gotta give yourself time. We know on average it takes to change like a habit is what 21 to 31 days. So that's already like a month. You gotta give yourself time because you already know we don't got just one habit, we got hundreds of habits. So imagine how much time you got to give yourself. So paradigm shift. Bob Proctor, watch him. Less is better than more. Um, you got more on that, Rams? I just got
No, on the FOMO and patience, no. I can't stress it enough. I can't stress it enough. If you want to be patient, give yourself after you see the setup. Always after you see the setup. Always after you know where your invalidation sits. Then is trigger time, and then is hold through the trade. Let the trade complete. That is, I can't stress enough. Give yourself the time to let the play out. We don't all have to be instant traders where, well, zero DTEs or 2 day expiration. And I see it so clear that I know for you to have a zero DTE, or you have to be so sharp, like so sharp. Give yourself grace to be wrong a few hours, to be wrong for a session. Doesn't mean it has to hit your invalidation in the session, but you know, I posted a play yesterday, and my fear was exactly what happened. I post a play, takes off. I'm like, damn. Now, because I want you guys to enjoy the fruits with me, is I'd rather sit through a entry day jitters, right? I like to call them the entry day blues, right? I'd rather sit through that to give you guys a chance, right, to get in, than to you clock the entry just go. It's not like you're always gonna clock the entry like this, but that's what you strive for. But when that happens, and now I don't like it because it doesn't give the chance, right? And then at the same time, I don't want to start putting guys this because the stock I posted yesterday is one of those stocks where it can you think it's gonna do what you think it's gonna do, and right back down it brings you. That thing's been burning contracts for months. So I had to be sure before I give it to the public. I know that institutions were backing this move. I had a catalyst behind me. I had levels behind me. I posted right before entry because I said I was already watching it. And then I posted when I was already in, but I had to let you guys know, please don't chase it here because I entered, and by the time I'm trying to get the whole screenshot thing and trying to write everything out, I look at the thing. This thing is gone. I can't have you guys pay up for something for just because I'm in it. It doesn't work like that, and that is also patience and FOMO. I have to restrain the FOMO. I'd rather you guys get it for a cheaper price than me, because that way I know if I'm red, there's a chance you guys are still breaking even or still green. And now when I know I'm green and I'm rocking out, I know for a damn fact you guys are making good money. But it's a very tricky fine line, right? So yesterday I had to just let you guys know, please don't chase. I saw it come back down to some of the levels, but it happened so fast. Market closing, I was watching it, but I know not everybody was on it. I know not everybody caught the entry by this morning. Just gap and go. So, but that is just being very patient. Sometimes, look, like we said in previous Zooms, a leap, a trade intent, right? You guys see when I day trade the SPY and I post the screenshots, you see my expiration date, right? If I'm gonna do a 6 months, 8 months, if I'm gonna do something for January 2027, where should I be looking at? What time? The weekly, right? Because the weekly is going to give me that structure that I need for the rest of the month, for the analysis, for at least 4 months to go. So I already know, okay, I could have a month where we have a little downside, but as long as we don't lose this weekly level, when you're looking at the daily, what does that weekly level down here? It's all the way down in the daily because it's another 5 bars back, right? So the weekly is leaps. Get that in your head. And then you back it by the daily, right? You want to refine entry hourly? Let me go tweak that hourly entry now on a 15-minute. That's cool. You could start using certain steps. But a leap is born from the higher time frames. Anything else, in my intent is a day trade. If I'm gonna take 3 day expiration, I need this to go and go now. If I got a 2 week expiration, okay, I got 3 days for this to fulfill. If I take a 30 day expiration, okay, cool, I can hold this for a week and 3 to 4 days, right? So you have to start knowing the timeline versus the expiration date that you're picking, because this way, and I only say it in this example because this is something that I use because I know how to control the level of patience on myself. I know that I know what the trade is. I see what the time frame is telling me. I'm gauging this off the daily. I need a few days to back me up here, right? I need a few days. So I need a 2 week expiration, 3 weeks, 30 days, right? But as long as I feel comfortable with the trade, let the entry day blues come. It don't scare me. I'm not gonna leave the trade. My stop loss is there. Take profits right there. If I see continuation, I leave a runner, move my stop loss to my first take profit zone or right under it. Let's rock on. Right? But nice and easy. Nice and easy. If I'm looking at a weekly, that's my leap territory. If the weekly takes me out, it took me out, I reposition. I'm gonna keep watching it. All right, cool. I guess this is coming down. Okay, this is how it's feeling. The next point of interest is here. When we start getting to those levels, my alert is gonna come off, and I'm gonna start watching it again. I'm gonna get my lick back, but I don't gotta get my lick back on round 1. I'm gonna wait for round 6. I'm gonna spend you real quick, and then I'm gonna get you. Good. That's all I got on that point.
Talisha, you want?
Nah, Rams is cooking. Good.
So then, since Talisha don't have nothing, let's talk about the hat that Rams got on his head right now. Yeah, I don't let nothing go past me at all. I've been looking at anytime, like, I know what Lakeisha, I said Lakeisha, my apologies. I know what's on Lakia wall, like the sayings, the quotes from reading it every week. I'm telling y'all, if y'all on camera, make sure you don't got no bullshit in your background, because I can see Shock, Virgil, I can see what you got on your wall. I can see a nice little chair next to you, all the books. I watch everything, man, everything. I'm just waiting for my wine for Talisha to give me that. But no, seriously, y'all. Meditate. Please meditate. Please do breathing exercises. Oh my God, monk. Breathing exercises will change your life. Breathe out your nose, not out your mouth. All this little stuff is going to help you in the market. I'm telling you, y'all. For real. And just be happy. Like, if you're just a grouch and stuff like that, it's going to make your market, the whole experience just bad. So I'm always happy. So when I take losses, it brings me down a little bit, but I'm still like feeling really good. So, but I do want to share something. Let's go on X real quick. Which one you want, Angie?
I was just gonna say so.
Listen, I ain't choosy. Just grab one.
What you got?
You know they official, they vintage anyway.
I know Talisha got some work behind there.
Right?
What you got on there?
Yeah, I'm gonna change my background. Even back here.
Nah, we need a chart and sip class. I'm just saying.
Yeah, a lot of them are gifts. And then I was like part of a subscription, a wine like subscription thing for a while. So nothing too fancy nasty back there.
That's that dry shit.
It's definitely dry. I don't like
it is dry. We definitely learned that she's a dry girl.
I don't like any kind of sweet drink. I can't do it.
What is that, like cab, right? I like the cab too. That's my favorite.
I have some cab. My favorite is Pinot Noir.
Savion, you got some Savion back there?
A good Malbec. Who?
Got some Savion block back there? Let's go.
Listen. Yeah, that's why my favorite is Malbec. I love a good Malbec. And then anything Spanish. I love Spanish wines. Yeah.
I didn't hear nothing that made my tongue.
Nothing for your palate?
Nah. I don't. I was just joking anyway.
Do you even drink wine?
So no, I did though. I don't drink no more at all. But I probably stopped like a year and a half, probably a year and some change though. But I wasn't drinking that. But yeah, my queen was right there, so I got off of liquor. Then she got me into wine. I started drinking like Zinfandel and shit with her. Like, but that dry stuff, never. I need some taste. Something sweet.
It is some taste.
A little sweet to it.
Yeah, Kool-Aid, exactly.
So, Trump has been talking about this market right here, drones. So I had built something up. The top pick for me is going to be AVAV. That's the highest probability I think that Trump is going to tweet this stock and give it a contract with Pentagon and stuff. But there's a list of I like ARCAT, I like NOC, I love all of these names on here, honestly. I put ONDS twice on there. So ONDS might be the banger because it's on there twice. ONDS is a good one. DPRO. It's on. Oh yeah. PRZO is a good one. I think it's like $1 and some change. But these are some bangers though. So I don't think I'm gonna read all this, but a massive structure shift is quietly unfolding across the global defense and technology sector as the drone market is projected to surpass 62 million active units by 2030. Y'all see these drone wars, 333. These drone wars is going crazy with like Russia and Ukraine and stuff. Fueled by aggressive government policies centered around reshoring critical technology, strengthening domestic manufacturing, and securing long-term airspace dominance. This macro trend is beginning to reshape institutional capital flows across Wall Street. When governments commit to scaling an industry of this magnitude, institutional money does not enter all at once. Large funds build positions and stages through calculated accumulation over time. For investors looking to align themselves with the long-term policy tailwind, identifying high conviction companies with direct exposure to the unmanned systems build out becomes critical. So then I have AV as my top one. Um, so this company remains heavily aligned with the next generation field, anonymity, surveillance, integration, and allied defense operations, making it one of the clearest direct beneficiaries of expanding global drone adoption. So I'm not gonna read all of them on here, but you got NOC here, then you got KTOS, what they do, RCAT. I love RCAT. I was looking at the chart on, and I love RCAT. Um, so yeah, you go through this, and yeah, I'm not gonna read all this. This is definitely Trump's been very active with his tweeting. So drones, drones, drones. Drones gonna pop off. Just gotta find the right one. And even if you don't hit the right one out of these lists, they all should start booming. But of course, one or two of them is gonna really pop off crazy. And I think it's gonna be AV or NOC. One of those two is gonna go crazy. Um, so this might be the move. Shares, or you could do leaps, but we gotta understand. And another thing, if another thing too that wraps back to the FOMO and stuff like that, try trading shares. It's it's easy. It's easy as hell. Like yesterday, what I know, me, Nisi, and Angie got in TE, and I looked at my thing, I think yesterday, and there was one point in time where I was up 17%, and we just got in that thing. And the first day we was up like they was up about 4%, but my entry was earlier, so I was up 14, no, they was up 7%. I think they peaked 7 to 8%, and I remember mine's hit about 14, 15. I think I even hit 16% on the first day. Trade shares, it's going to remove all of that, because the whole thing is the color of the candles and how they move is a strategic thing. They know it messes with your mind. So you're trading shares, you don't have to stare at that chart so much. It's all about the time frames and stuff. But start off trading shares. That'll build your confidence once you start seeing that green P&L. Because when you see red P&L, it automatically does something to you. So trading shares is one cool thing that I always have done. I just never talked about it because nobody likes it. So it'd be like kind of a waste. People just scroll right past, especially if I would have posted in the page. They would scroll right past it. But now I'm here and I'm just everything that I do, I just trying to show y'all. But trading shares is so undervalued. Like it's
Hey Ed,
go ahead.
a little more on that. Like how do you trade shares? I know like buy it and sell it, yeah, obviously. But like what are the parameters around that? Do you wait for it to hit something? Because when I look at shares, I think about long term. So when I see, it going down, I'm like, I don't stress too much because it's a long term investment. So what's your mindset around that?
Can I throw something
So
first, Ab, and then you do?
yeah, go ahead.
Yeah, so for that, I'll be quick so you can cook because I know you're cooking. But for that, it's the same. It really falls in the category of you have to trade shares of a stock that you don't want as a long term, but is a tradable asset, right? So because at the same time, what you're going to trade one share of Goldman Sachs is $1,000. So you, depending on your money, right? You can't just go and I'm gonna trade 10 shares of GX. That's 10 bands at a time, right? But you could trade a share that's $2, $3, $10, get the upside $2, and you could do that with something that you don't hold for the long term. But it's the same theory as trading options. You're trading up to this take profit zone. You're working on your break and retest. You're working on your entries, but at the same time now you don't have theta kicking your butt just because you're consolidating, right? So the emotion starts hitting different. So you can start training yourself without the extra heat on your back from the Greeks. That's all I got on that. Go ahead, cook, Ab.
Let me switch to my phone.
I'm about to take y'all. I'm about to take y'all on the road with me. Put your seatbelts on. So it's a difference. Well, like Ram said, not really, but how I take it in my head. Like if I'm investing, I'm not looking to I'm not looking at my chart really. When I'm investing, really, I'm not looking at my chart to be honest. I'll look at my chart every now and then, but you just set alerts and forget about that thing. You don't play you if you're in like Google and Meta and you're investing in them things from like when they was at
that's a fact.
Meta was at like $200 and stuff. I don't understand why you're looking at that chart. Just set your alerts and stuff like that so you know when to sell. Every now and then you look at it, but staring at charts to make you get out of trade earlier than you need to. But when I'm trading shares, I'm not investing. When I'm trading shares, now I'm trading shares with the mind of like a option trader. But I'm looking at it like I don't have no Greeks involved. So I'm able to just stay in these trades as long as I want. But how I enter is just like with options. Like I'm really looking at my chart. My entry is going to be on certain time frames. I'm looking at the weekly, or I might look at the monthly. Don't forget we got a monthly closed after today. Today's the monthly close. And then my exit is the same way with I have my targets, like my moving averages might be my target or structure areas, and
Right.
I'm scaling out. I'm scaling. It's the same thing as options. You don't want to overthink it. The only difference is you don't have no Greeks involved, so you can stay in as long as you want. That's the only difference. But it's the same thing as options. I'm trading it just like as if I'm trading an option play, but I just don't have that that rush. It's no stress. It's like a runner kind of.
Right. Right. I see
That's
on the YouTube hip hop music is like Abba's saying, same thing. If you're trading, you are the mindset of trading the shares, then you hit it the same way you would an option play. Where's my take profit? Where's that TP zone? Where's my next level? That's why I get off these shares. I'm gonna leave 10 to run. Same thing.
Yup. And the only difference is now when I'm well, one thing that hurts option traders is the percentage thing. They see 20%, they be like, man, this ain't shit.
Nothing.
They be
Yeah.
like,
Yeah.
it's like 20%. They be
Nah,
ungrateful.
20% could be a
But like
lot. Yeah.
I really think that's mostly I feel like everybody is good at trading. They're just selfish and ungrateful. Like Talisha said, it's not your money yet. Like it's unrealized gains. But we be like, this little, what the hell,
Mm-hmm.
15%. But I just be like, damn, I remember like when I was working in the market, I switched my mindset and started thinking like, damn, like when I started working, I'd be like, damn, I'm really sweating in this warehouse, lifting all this stuff. So when I would be able to trade and I'll make even $20, I started being like grateful, like alhamdulillah, all praise due to Allah. You got to be so grateful. That's being grateful is one thing that's going to take you to amazing places. But um damn, I lost my train of thought. Oh, I had this investing thing that was showing me like it was like a calendar that I had, but it'd be like all you gotta do is just make $25 a day. That's it. Just make $25 a day. It don't seem like a lot, but the shit add up because you work in the actual job. This is not your full job at the time. So it's just stop stop looking at that P&L, trade off the structure, because if you trade at the structure, you might be at all-time highs and be like, shit, I'm only up 17%. I'm about to stay in. Don't do that.
Sounds
It's
good.
like, get out of that thing. It's already crazy up. So that's one thing. Y'all got to understand, like, hitting 50% is extremely hard. We got to stuff. They said, Lisa Nicole said, the thief of all joy is comparison. That's what hurts everybody. Starting looking at everybody, oh damn, like he going crazy over there, 75% and stuff. Like I know I could do that. And then you try to do that, now you smoke. You should have took that little 10% because everybody's situation is different. Like everybody money is different. 10%
Mm-hmm.
for like somebody big like Trap or something is life changing for me. Like big, like that should have changed my life. You heard? But 10% for my type of money to him ain't shit. It's like a black amount, you know. So everybody's different. Y'all gotta understand that. That's another thing. We gotta know our money is different. Our money is not the same. So comparison is thief of all joy. And just trade shares. I'm telling you that shit. If your confidence is low, don't stop day trading. Start doing leaps. Start trading shares. It'll change your life. It'll change your life.
Less than 2 years after its launch.
And it'll give you training. It'll train your eyes more without the emotion involved. You can see more patterns eventually, right? Because I see what the shares do. I see, all right, cool. Now it's been months. You've been trading shares. You've been getting used to it. You be see the reaction. Okay, I see what they mean by break and hold, right? Because everybody is a break and hold. How long do I hold for? How long? What is your trade intent? I don't know what time frame you want. A break and hold on every time frame means 15 minutes to 30, 45 minutes if I want a 15-minute. A break and hold on the hourly could take 3 hours, could take 2, could take a day. I'm on an hour session, right? So a whole session, I could wait 4 hours for a setup. And then at the end, damn, it invalidated. It didn't even hold. And you just waited 4 hours, but that's the patience, right? And if it ain't there, you know what? Today I didn't take the trade. I wasn't comfortable when we came to my snipe zone. It didn't do what I needed to do. The target kept moving back and forth, and then boom, bounced. Kept going the wrong way. All right, cool. Probability stacked against me. If I'm getting in at the top, probability starts to stack against you, and you see 17%, take it. Because that 17% is going to be negative 40 in 2 days. That greed does vicious things. Look, what was it the other day? I hit SPY. I think it was some easy, like what we like to say. It was like what 16% on my channel there, and then but 16%. However many contracts I had, that was over $170 a contract every contract. That's lunch money, dinner, and everything. I'm good on 16%.
Yup, and we gotta look at it like.
My day trades, I can't hear you, but my day trades be hit like 6, 7, 8, 9, 10%, and I'm still hitting like $70 a contract, $55 a contract, times however many contracts I got. 50, yo, give me 50 for every. Come on, let's go. It's quick. I don't got trap money, and I understand that. So my trades gotta come different. I can't wait for 100% every time. Now, hey, look, what happened yesterday? I can tell you now, it's not going to happen all the time. You're going to see me get out of trades at 40%, 35%, and we gonna hit big money for those, it should be big money to you too. Because the big money is depending to the money that you put on. So if you're throwing 1,000 and you make back 400, come on, that you good. You make back 500, you just make back half of the $1,000. That's like you throwing $1 million and coming back with 500,000 on profit. It's the same thing, just the money's different. The zeros are different. That's all it is.
And you can't get that nowhere.
That's a fact. If you throw $100 and you make that $100 become 135, you're like, man, $35, bro. That's 35% on your. That's 30. You almost half of that 100. You 15 short from being half the money in what, an hour and 15 minutes. And boom, give me that 35 off that 100, because I'm about to recycle that 100, do it again. Give me another 30. And I'm going to do it again, and I'm going to do it again. Eventually, I could throw 200. That 30 now is 60. Feel me? By the time I'm throwing the 500 now, instead of 60, I'm coming back with 150. And that's how you make the money snowball. And not even because, bro, I love everybody, but at the end of the day, we don't all have the same money, so you can't expect the same type of return. So your return might look a little smaller, but that's my level of money. So you gotta respect your profit, right? And like T said before, we put too much thought on the 100% that's not here but the 30 is. What we doing with this 30? How we making this money real? Because right now it's paper. It's just on my screen. So, okay, how much I put up? How many contracts I have? I get my money back. Give me another contract off of that. I'm gonna leave 2 of them sit. But the moment I see this hourly close under my EMA, the key level, all right, cool. Give me them 2 times. I'm gone. You set rules. You set the parameters. The trade is mapped out, but you gotta get paid. And greed doesn't get nobody paid. But you know what greed does? It make everybody dish out money to the market.
Bro,
Greed,
and
greed
then
go ahead.
the crazy part about it is like what Sean just said, and I've done it so many times, is like I'm up a crazy amount. Like he said he was up 60%, but he didn't take his gains and he lost it all, right? And then you go ahead and you be like, damn, I should have just took that little 60% and stuff like that. Like it's like, why don't you think about that while you're in the trade? Like think about like I remember last time I do that. Like damn, I remember last time I didn't take this money. Let me go ahead and take this money now. You got to start. That's what a journal is for. Most of us we don't know because we don't journal. That's another thing that's really bad. And then like I think about like if I just made $50, shit, I just made now I could go. I think about it like damn, like this is enough to fill my tank up. It's hard as hell out here. Like everything is so expensive. I'm happy as hell if I make $30 because I understand my money. I know what my trading account is and stuff like that. Like people be ashamed of small accounts. Don't even call it a small account. It's
Oh
small
yeah,
people,
man.
but not to you though, huh?
It's a fact. It's a fact, bro. Like you speaking fact. Like everybody thinks they must have a huge
$1 million.
account. Like yeah, like so true.
Yeah, like that's why one thing that helped me was Mario and Chris Sangru. One thing he got, like when I first started trading, was never to look at my P&L, like my profit with the money size. He said like that's why when I used to screenshot my trades and stuff, I'm only showing my percentage gains. I'm not really showing my money thing because I drilled into my head not to look at the money thing because that's what makes me sit in the trade longer than I need to. But if I'm looking at percentage gain, I'd be like, oh shit, 75%. It don't matter if this thing was $2, but I'm up 75% on my money. Shit, the bank only give me 1%.
Yeah, that's a fact.
The bank only giving me 1%. You mean to tell me I just made 10% on my money in one fucking day? Like, so the nerve of some of us to be so ungrateful. Like, it's really like do you like I really be like, damn, you crazy boy. I really be like, damn, the nerve of us. Like, I'm really sitting here being ungrateful for this huge percentage that I got on top of my money when there's some people that's not even able to get in the market because they don't have no type of nothing, no type of side money and nothing. Like now this is where it comes to God. He's gonna spank you. I some of y'all might not believe in this stuff, but like if you like Steve Harvey said, if you're not grateful for the little things, what makes you think that he's going to give you more? What makes you think you're not even acceptable of this small thing that he's giving you? Why is he going to give you more? And then on top of that, you're being ungrateful when this $50 could literally put food on somebody's table for days and they've been starving, they've been going to the pantries and stuff. We got to think about stuff like that. Start thinking about that's why I love being a Muslim because they put in our head how it is to be like we have to fast and stuff so we could remember how it is to be we don't call them homeless, we call less fortunate people. You put yourself in them shoes. You want to fast so you understand what it is not to have food, not to have water, so you're humble now. That's why I love being a Muslim. And once you have that type of mindset, you start thinking about other people and stuff, that'll change your trading thing too. Like you won't be so ungrateful. You'll be really grateful of and you'll notice yourself get out of trades way quicker than you need to and just be happy for whatever percentage you hit or whatever. That's all I got. I just really had to touch on that. I'm glad we talked about that because it's so important that we talk. I think a lot of us is so ungrateful and it's disgusting. It's really disgusting how ungrateful we are. When it's hard as fuck out here. Just be happy that you could even trade. I don't care how much money it is. Stop looking at the amount of money. Look at the percentage, and just be grateful that God's even allowing you to be able to even trade in the stock market, man. It's hard as hell out here, y'all.
That is a fact, yeah.
I just wanted to add something on the drones sector.
Of course.
So I don't know if y'all know, but what's his name? Donald Trump's Jr. has direct business ties to companies in the drone sector.
Why doesn't that surprise me?
Is this Naldo? Is this Naldo?
Go ahead and drop the kickers, Naldo.
You be having some heat, and you
For
only
real.
share it on the lives. But I'm
Yeah, for
thankful
real.
though.
Yeah, so he's a board advisor and shareholder of Unusual Machines (UMAC) and a drone motor component manufacturer.
UMAC, like that?
Yeah.
Unusual Machines.
So.
Oh wow, that's at a key level right now. Oh damn! Look how it popped.
Yeah.
Damn. Look at this. Right off that 20-day. What am I? Oh, but that's on the 5-minute. Hold on. I'm gonna have to take a better look. I mean, you got the range right here. Point of control. That's in 2 sessions. Let me see. Damn. Damn. Oh wow, that's a power move. In the 4 hour, that's a big power move.
That gap up just yesterday? Is this today?
Yeah, that's a gap up. That's a few days ago. This is the 4 hour when this happened. On 5/27. So this is a good the month. Yeah. So, let me see. Let's look at the daily. Wow. Damn. Damn, man, this guy is just pumping whatever stock he want. Like,
yeah, for
look
sure.
at this.
Oh my God.
He likes Red Cat too because it's American made. So he likes to build in America, right?
Yo. Is that the daily candle? What's that? The weekly.
Yeah, that's crazy. No, this is a weekly. So you figure. So look at this point right here, right off the wick too, and like I don't use the wicks all the time, but look at the structure point right here. So let's go inside of this wick a little bit just to hit this point of structure right there. Hold on. Damn. Why is my thing acting crazy? Yo, move. Right there. So you see, I mean, yo, honestly, like that strength behind it, it left everything in the dust. You get this thing to pull back right here, bro. Like somewhere in between here is your range. From there to here, this whole piece of the candle right here, you could probably catch some nice upside on this because everything this guy talks about, or they want to pump, they pump. And this got crazy strength, but I would like a pullback, give this 9 a little bit. Because, if next week, so think about this. If this week was like this, next week, what might happen is it might start and wick down first. And then the rest of the week, it can probably push. So, but I wouldn't just chase it. It looks crazy. The move is crazy for the week. And then I'll also let me see something. So since the move was up, right, I'll get the fib and I'll go right from the bottom to the top. I could use the body or I could just use the wick. Let's use the wick. Let's take the whole price action. So look, this thing could go to $43. But if you could look at that. Look right where I said. So, and that's where the 0.618 and the 0.5. So right in your golden ratio piece, right? You get that pullback somewhere around there. I could say, yo, go ahead, do your thing now though. Like that, but don't chase it because at the end of the day, I wouldn't chase nothing. That's just because that's imprinted in me. But I do like it. I give you this. Like I do like it. That pullback right there, nice and soft. Get in that. Get in there. Anywhere between that 26 area, you gotta see the whole reaction right here, right approaching into the golden zone. Because right here could just be a wick, a candle with a wick, boom, and come back, bang, and shoot. It looks nice though. That was a good find, yo. And this hasn't been around for long. So look where it came from.
Appreciate it.
Yeah. That was a good one. Wait on that pullback though. Don't I mean, look, don't you feel me? But
Yeah,
just wait on that pullback for the reward to be bigger.
yeah, for sure to slingshot up.
Word.
Yeah. Rams, just a quick question. What time frames do you usually use to like actually like jump in or see when to jump in?
Well, my entries will come from like so. It depends. Again, like it depends. Like if I wanted a leap out of something, I mostly focus on my weekly structure and where the pullbacks can come to for the week, right? So you see, like even here, like I got the volume candles on, so you see bigger candles than others. So if you see the candles like this, it's a little less volume. So look, if you even see like the drop, right? Look how low the volume was on the drop. So then when the run came, it took over. Even here, it just came back right to where the drop started. But then look at the run, right? The run was fueled with more volume since it started running. So I would look like at the weekly if I'm looking for even short-term leaps, because a short-term leap, I'm looking at something contracts out to like 6, 7 months. Doesn't mean I have to stick around for the 6, 7 months, but that leap is what I need for the weekly bar to do what it got to do. Because this one bar, like you gotta put in your head like, all right, one of these bars is gonna take till next Friday to get complete, right? So sometimes I could, if I'm looking for leaps and I'm leap hunting, it could take me a couple weeks to find the the best reliable setup, right? Because I'm waiting on weekly bars. So I might get in on a Monday or a Tuesday if and you might look at a weekly bar and it might be all red engulfed. And you might be like, damn, what are you doing? But that's because it's the beginning of the week. I'm getting in with that wick, right? Right after my hold. But there's a certain things that have to happen for my leap. Now, you see, when I do a day trade, I'm looking at my daily structure just for context, for what side, what bias, bullish, bearish, where's my context at? What are the chances we keep running today after if we pull back here, or if we just run up off the gate? What are the chances that yesterday's price action, that's why I'm looking at the daily, what are the chances that we can come and engulf this candle? So now I get a bias from the daily. Now I'm down to the 4 hour hourly entries. I play in the 15, 5 minutes. So those are my day trades. And I could take a day trade for 3 days. Very, very short term trade. So, and then I'll start looking at different time frames for that, because if I'm gonna do a trade that's gonna take me, all right, if I'm gonna look for an entry, I already saw what I wanted to see this week. By next week, Monday and Tuesday, if I see what I want to see, but I know that this trade is not really for long term. So now I know, okay, I'm gonna look at the 4 hour, get my levels on the 4 hour, align them with my hourly levels, and now I'm trading between the 30 minute, 15 minute, 5 minute. Once I see I lose a certain level on the 30 minute, I already know. But if I see that I lose it on the hourly, that's my cue, right? If I lose something very important on a 30-minute structure, now what can be coming next? It's coming for the hourly structure. So the time frame always comes most important to the type of trading style that you're taking at the moment. So for leaps, for sure, I always like I'm looking at everything that I can. I'm dissecting the weekly as much as I can. And obviously I look at the monthly, because in a monthly candle, you got your last 5 weeks. Or look, 4 weeks. Excuse me. So you got your last 4 candles in one candle. So now if that monthly is showing reversal signs, now I know like, all right, cool. Well, they say selling May go away. May has been kind of pumping. Can May swap for June somehow? Like, all right, let me look at that monthly print for May. I know it ran up, but what is the candle telling me? Because that way it'll tell me if now May is gonna swap for June, and now June actually takes May's role. I'm not saying it's gonna, but it's just probability. You're just thinking in probability. So now I know if this weekly candle, this weekly candle It's heavy. Let next month come in, right? Let next month trick retail into, yep, June shifted for May. Next month it starts hot and heavy because, like we said, next week we got ISM and manufacturer data, all this important non-farm payroll, all this important data that's gonna. So now the market is gonna be like, yo, all this stuff is coming out Thursday. The most important numbers Thursday, Friday, end of the week. All right, we doing math. Let me sell off real quick. Let me take some profit out off the table for just in case later on next week. And then by the end of the week, you see the candle come back to life. So every little piece of the perspective of the trade intent is gonna matter. So it just always depends. If you're day trading, cool, lower time frame. If you're leap trading, you have to stay stuck no less than the daily. And weekly gives you the best content. Why? Because once I'm gonna give you something like this is even come back to the video and just understand it. Like in the weekly, there's two things, right? If I respect the 50, I'm bouncing, right? But off the weekly, that's hitting a couple numbers in between. But on the weekly, the main thing you want to look at is a candle like this that sweeps, right? Sweep all this, sweep all this. Yeah, you can see the strength right here. But between here and here, we're losing steam. Then comes this. It starts. This candle started here, came down, swap and close, right? The next candle was your trigger, not per se had to be your entry, but was your trigger. So then this came and it gave you the same context twice on two weekly bars, right? Let me go inside the bars I'm talking. Right here, 1 and 2, right? Then this one came and now I'm already like kind of getting near my 9. And as soon as this one came, this one is okay. I could wait on the entry. Sellers are still pressing here, but you already see you sweet liquidity. You could have got in. You could have used this candle. You could have used this candle. You could have used this candle and this candle. You could have gotten any of those candles. Your stop loss is under this weekly candle because for you to come swipe again, you already had the chance to swipe. This was the whole week's worth. So now if you do come and swipe again, I'm out the trade because that means in a weekly context, we're coming all the way back to swipe all this money. I'm not sitting there for that drawdown all the way more than 50% from $12 to 7 or about 50%, 40 something percent. So now I'm already seeing the shift. So if we do swipe this again, that's why my stop loss is there on that weekly frame. So I would have been just a happy camper on any of these entries. And look, you would have been in there. If you would have been watching this, because at the end of the day, you was in the structure point right here. I don't have the levels mapped out here, obviously, because I haven't charted this. But if you look at it, look where those wicks are hitting and follow it back. You got your body, boom, structure. You get that indecision doji candle right here, perfect, right off the body. You keep going. Right where that 50 MA is sitting, with a dollar line you see. That was a key level. That was a point of structure. You can see it without even putting a line up. And then you see the sweep because the sweep on the weekly holds weight. The same way it holds the same weight on a 5-minute, but it's a 5-minute sweep.
Right.
So in a 5-minute sweep, it can sweep, right? It'll sweep, boom, go, poof, 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 and then poof. That's it. We change character, and somehow you got a whole different sentiment now because it's a 5-minute frame. So the sweep is only gonna work you for the 5-minute frame, if that's where you caught the sweep at. So all the candles, they speak the same way depending on the time frame. So that's why we always, every trader mostly, it's saying the patterns on the higher time frames hold the most weight. Because it's not saying that in a 15-minute it will play out, but the duration of the pattern has to be quicker because we are in a 15-minute frame, in a 5-minute frame. You'll see a pattern play out on a 1-minute in a snap of a finger. And you're like, yo, nah, the pattern did it. Yeah, nah, the pattern did work. Look, it did boom, boom, boom. It did it. It just is a minute frame. It's gonna dissolve itself right away. It's gonna invalidate or play out right away, and then it's gonna go to the opposite way because the pattern is not supposed to just keep running after it fulfills. That's it. Next pattern is developing.
Right.
But the weeklies for the deep swings and your leaps, this is gold. It's just gold. You could
Yeah.
have waited for this to really gain the 9, right? Because right here you would have did it, but if you look at the candle context, you're like, okay, so you mean see, like if I'm looking at the context, I'm like, okay, we're coming from down here. I understand that these are rejection candles, but when you're reading the context, you got to understand if we sweep all this money here, if we held on my 50-day, right? And I see these right here, right? I gotta say, okay, I get it. The sellers are attempting. They're trying to catch the ball back, right? But I already know on my weekly, I already know we sweep. So I could have got in the trade on this. This was my confirmation candle, if that is your trade intent. But that's why I say you could have used any of these for confirmation. And many traders, which I use, and you guys hear me talk a lot, I love to reclaim the 9. So I know that I reclaimed the 9 here nice and strong. So this was your ultimate confirmation. So then now you wait, because you wait for the closed candle. Because if you're following the weekly candle, now I gotta wait to see how it closes. I can't have you looking like this, and then on Friday you just reject and you leave another wick just like this. So now I'm like, okay, the sellers are here. They're persistent. That is the context at that point. But now we close strong. This is your final confirmation. You wait for this candle. This is your entry. Let it boom. As soon as it gets back in, you in, because you already know you're back. You're back. Your stop loss remains the same.
Right. Fire. That last candle before the push was a hammer candle.
This right here. Yeah.
Yeah.
And then it followed. What is this? A Maribozu? Pretty much. Yeah. So that's the Maribozu right there. Right after that hammer. So, but good find, yo. You could snipe this for sure. Like for sure, you could snipe it.
Appreciate it, man.
Got you, bro. And look at those two daily candles. That's eh. So now you can say, okay, it just swooped right from here. So any gap that doesn't fill immediately is gonna have continuation. If the gap would have been weak, right? It would have this would have just came and wicked in and then went. And then you could go into your other time frames and see what happened with the gap fill, right? But any gap that doesn't fill immediately will have some sort of continuation.
Good to know.
Yeah.
Oh, man.
Word. All right, guys. Where's everybody? Ab, you there?
Yeah, I'm here.
Ab is good.
No, I'm here. I got my kids in the car, so.
Oh, I bet. Go ahead.
I'm listening.
All right, so because at 4:30 I gotta make a move, so I got like about 15 more minutes.
Hold on,
Any
real quick, guys.
questions that you guys may have? Look here.
What?
That's
I was almost
fire.
started trading. Leah, look here, you too loud. Nah, that
You
we
still here
appreciate
too?
that,
If you got
Nala.
anything to add. Nah, she's probably in that meeting. She said she had a meeting.
Oh, Talisha left. She had to
Oh,
go.
but so yeah, if you guys have any questions or anything, any other chart that you might want to share real quick, or anything that you might be looking at, we can take a quick look. And let's take a look. What did Micron do today? Because I didn't look at it at all. But I know it's the hype. Let's look at Adele and Micron real quick. Let's just see what they did. I didn't take a look at them all day.
I'm not sure. I gotta call your mom.
Dang, man. Wow. And look at that. So now look at this. Look. I'm even gonna give you something crazy. Like, look how powerful the 9 is, guys. Like, yo, look. You reclaim the 9. You get in on the next candle. Hold. You break. You get out. I mean, come on. You're under the 9. If you're now down with puts, you leave it alone because you got all these floors right here on your MA. You're under the 9. You wait to reclaim, boom, get in on the next candle, poof, you gone on a weekly
Hey,
concept.
is that EMA or SMA? You're 9.
EMA.
EMA. All right.
Exponential, yeah, because the reason is you want it to be the magnet. See, all these other ones are my estimates. So I love them all, but I love them all for different reasons. But I need the magnet. I want to see the magnet. I mean, look, other people use the 8. I don't know. There's different EMAs, but I understand the 9 because I've been working with the 9 for a while, like for a long, long time. The 9 I've had on my chart for, so I could understand how the 9 works, and it's like, okay, sometimes it might take long, right? Because this is what, like, 1 week, 2, 3, 4. Damn, that's not really like right there. You'd be like, nah, I don't like it. Like, it's not above. The 9 is still facing down, so that's 4 weeks, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 weeks. You had to wait. 17, you get in this one, or you got in this one. So look how long you have to wait to make from 154, let's say before the whole $100 move, let's say you don't be so crazy greedy, to 256. That's $100 move off the 9. Imagine you pair that with the levels, with the boom, with the come on. But the 9 is just that powerful, guys. That's all I wanted to say about that. Just like a lot of tools, but I just understand the 9 so vast that look, it's clear as day. When I go on a higher time frame to give me weight, I can see it. I can see the pattern over and over and over and over. Here. Boom, and lost it. You chill, boom, I see it here, lost it. You're still in profit every time it loses it. And if you follow your risk management, if you follow the rules of what your tool is telling you and how your tool performs, and you can understand how your tool works, you follow the rules, nobody can tell you nothing. Not FOMO, not pay. You're already doing what you gotta do. Look at that candle, though. But now this is the context, right? What happens? I mean, I am so far now from that EMA. Price touched here. It went 63% above my EMA, and price closed right there. 59% from the EMA. What do you think is the logical thing that should happen if that is a price magnet? We are either going to consolidate here, sweep, continue. Damn, that came out horrible, right? Or we're going to pull back. Boom. And on the pullback, right? This 9 MA will get there, and it'll have continuation if we don't lose the magnet. But it is a legit magnet. Like, y'all be thinking I'm playing when I say it, but it is. Other traders will say it. It's not like just my word. It's how the 9 is referred to. I don't say you have to use them, but it's a tool that I understand. Mm-hmm. So now with an extensive move like this, you want to be careful because, I mean, it's easy to lose 20 points off this $103 that we gained today. 30 points is not that bad.
The smallest one you use?
The 9? I
is that the smallest one you use?
Well, but yeah, that is my shortest term, yeah. To give me the room. Yeah.
Cash.
But you see, like, even on something like this,
ton of indicators for it.
I would definitely, even here, I would trim, because now the thing is, it's gonna mean revert. The rubber band itself. See, where's the? Let me see if this thing wants to draw it right. So if the 9 is here and it's curving so up, right? So it's like I like it like this, like regular, like regular. Let it go regular, so the move can just continue, right? But then like now it's so up that it's the rubber band is like this right now, right here, and then it's stretched. You know when you put it between your fingers and you got the little piece of thing and you do it like a slingshot, and then when you let it go, it snaps right back to your fingers. That's what it's gonna do from here to some point where the rubber band is loose enough again to stretch again. Because if that 9 makes it here, now the rubber band stretches from here and it has a new point to stretch. And it can stretch either way. It can stretch down or it can stretch up. But that's your reversion. That's how you get the pullbacks. Now, what we want to see is a soft pullback, right? For regain, a tool that you know, I got my key level, I got this, and I got the 9 right there. Come on, what more do I want? And then, like T told us before, you could have all the context in the world and still lose on that trade. But if I lose on that trade, guess what? I don't even care. I don't even sweat it because I had all the confluences that I possibly could. So if the trade goes against me, okay, cool. That 8 ain't 9 to me. We close under my 9 like I was saying before. Boom, it's over with. I'm gone. I'm not even thinking about it. I'm just following the rule.
Hey, Rams, what's going on? What's good? It's Virgil.
What's good, my brother?
Hey, I just got a quick question because I'm not that good with moving averages. I just got a quick question. So, using the 9 EMA, is that based on a weekly then?
Yeah, because regardless however you look at it, let's say if I go on a daily, it's just gonna recalculate where my 9 is. So now you see that big candle, right? That big candle really was the weekly gap. So this whole gap right here is the imbalance on the weekly candle.
Oh, okay. Okay. Because I was like thinking, because I use like a moving average ribbon, and it has like four moving averages on it. So I got it just like set to the daily. And I got the 20 and the 50 and the 100 and the 200.
But they should change with all your time frames though.
Well, so if you go to the you can set
them.
You
can set it up to how you that's fire, Verge. That's fire. That's fire.
Well, I'm just saying I got mine set to where it just stays on the daily. And I'm just talking. I'm just saying so like your 9 EMA on your weekly would work out to about 45 days, which is about the 50-day moving average.
Right.
On a daily. You know what I'm saying? So I was looking at the 50.
I see what you're saying. That's fire.
What I was always just kind of not confused, but just like if everybody's talking about EMAs, that what time frame are we basing it on? Because are we using a daily or is it set to your chart? If you're trading a 5-minute or 15-minute or 1 hour candle, then sometimes you're going to use that 9 and 21 EMA based off the chart. And you want to just be aware how you're using it. Because if I'm, if I'm trading an hour or so, with a 5-minute entry or something like that, then I'm looking at the 9 and 21 based off the chart and not, necessarily the day. So you just going to be sure how you're using those moving averages. Are they based off the chart? Or are you looking at, if I'm looking at a long-term play, then I'm looking at the 200, the 100, the 20, and the 50-day moving average. And you can see that all from the daily. I can see the 9, I can see your 9 EMA, which is the weekly, it's 45 days. You know what I'm saying? And so I just like it like that. I'm just talking out a 21.
That was 21.
Good. I'm pretty sure everybody knows this. My favorite is a 21 EMA or 20-day moving average because it's based off of the total days in a month, total trading days in a month. So and I do have an indicator out there at 9 and 21 EMA, and it just I use it specifically for that. All it has is the 9 and 21 on it. You know what I'm saying? So I turned off my moving average ribbon because on TradingView you can get the moving average ribbon and you can set 4 moving averages on there, one indicator. So if you're in one of those lower tier plans where you're gonna only have 2 or 3 indicators, you can get that moving average ribbon and get 4 moving averages on there. And you can set them, however you want time frame or to the chart. And then I got a separate indicator, shockwave 9 to 21 EMA. I'm not trying to sell it enough. I just set it up because
put it in
I
the
wanted
chat so
something.
they can download it.
Because I wanted one, because I looked, there's no EMAs that was just, give me the 9 and the 21. All I care about a lot of times is the 9 and 21. I want the 9 cross above the 21, and that's good momentum, like you had. Once that 9 cross above the 21 EMA, that's just, I like that. So so I got that out there. Maybe I was supposed to link.
20.
What's that?
I used the 9 to 20.
Yeah, the 9.
Yeah,
They
that's a
all
good
close.
setup.
Yeah,
Hell
they
yeah,
all
that's a good
close.
setup.
So
see, like I do the same thing, Shop. Like that's why I got this. See, that's my favorite indicator. That's why you see my bars light up, right? Because that's the trapper volume trigger plus my simple moving averages. So in this one alone, I can have 1, 2, 3, 4, 5, 6 at the same time in one indicator, and I could put whatever I want there. And then also I got right here, this is Ab's special 5 EMA. So if you throw this on, you're gonna see the EMA with the settings that he used.
I'm gonna check that out. I
Right?
didn't know you had that. Oh, I
Yeah,
guess I did know it.
so I use that one for my regular averages. So when I don't want to see them real quick, I do this for less noise. And then I use the ribbon. I use the ribbon for my 3 EMAs right here, which are these are my leaps, my swings, and my magnet.
Okay.
So I use, so you see right here down here. So just look how it bounces off this one right here. Bow. So imagine the discount zone right here. Is at 800, 400 moving average. So you get all the way down there, chances are the rubber band has snapped way too far. On a daily, weekly, this is where you see those type of moves. Look, right here, you lost the discount zone. What happened? Spring loaded. Crazy. But those are my main magnets right there.
That's cool. Good work, man.
Do
That's
you
all
just
I
use
had.
the 9?
Huh?
Do you just use the 9 EMA or you have other ones as well?
EMA, the EMAs I only use these 3 are the ones I use, and then for simple moving averages, I use this lineup.
Oh, simple moving average.
Yeah, the simple moving averages, this is my lineup. And then the EMA's exponential moving averages, this is my lineup.
Can I see your settings on the ribbon?
On
I'm
the
taking
ribbon?
screenshots. Yeah. Did you leave it default or did you make some changes to it?
No, I didn't make no changes. Look. All I did was I shut one down because I just needed my 3, and I color code them the way I like to see them, like my color codes.
Right. Okay.
And then in style, I didn't change anything here. Just same thing with the color codes. And position is default because I'm just going with the time frame. So I just understand, like, all right, cool. If my 9 EMA on the daily is sitting here, and then when I go and check the 4-hour hourly and I see the 20 sitting around the 308 area, 309, 307, 306. Now I know that falls in confluence. The hourly with the daily, my 9 EMA is sitting there, and on my hourly, my 20 is sitting there. I lose that level, damn, there's going to be a little bit of downside. Now I start looking at what the possibilities on the downside could be.
Rams, I created a signal that will all the time frame when the 9 and the 20 EMA cross going down or up, it shows me all time frames in the corner.
Oh, that's fire. Put it in the chat. I'll check it out.
All right, no problem.
Word. That's fire. Any last words real quick? Because I'm probably gonna get out of here in the next like 3-4 minutes.
No, I'm just waiting for y'all to finish, and then I'll just wrap it up. I don't have nothing to add.
Michael Jackson. Yeah, quick, look.
You can hear me?
Yeah, I was like.
Yeah, I can hear you. What you said?
Oh no, I was letting y'all rock. I was letting y'all go because I don't have nothing to add. The kids just got home from school, so they
Oh,
tell
word,
me
word.
about their life.
I got a question for you. When are you using the EMAs versus the moving regular moving averages? When how do you approach that? When do you use your EMAs versus just the regular moving averages?
You're
Who's that?
asking me that, Verge?
Yeah, I'm asking you. Anybody. I mean,
I
I
always
don't
use
know.
I always use the same lineup, and I always understand that so okay, like so even Ab touched on this the other day. So the EMAs are exponential. So the math that you do to get to an EMA, the let's say if it's 9 days, right? Day 8 don't matter to the exponential the way the last 3 days ago matters. So the math is different from 3 days ago to the eighth day. On a simple moving average, you average if it's a 20-day, all 20 prices get the same average. They get the same tally, right?
Mm.
So that's why they lag different because day one of the 20 days means as much as yesterday, as the 19th day. You feel me? They mean the same exact amount, but on an exponential, it don't. So that's why they're different. There is a magnet versus a dynamic wall. So because you
So
have the lagger, the SMA, the simple moving average can act more as a dynamic support and resistance than the exponential. The exponential is
uh,
the immediate magnet. So you can lose that magnet and come down to the lagger and then go. But if you lose the magnet, you can lose the the structure, right?
the,
For a brief amount of time.
the EMAs have more momentum behind them. They show more momentum, whereas the moving averages may give you better levels. Just kind of better
Exactly.
overall
Exactly.
structural levels. Where the EMAs is like, hey, we're trending. You know what I'm saying? That 9 cross above the 21. I like to see that.
Facts.
Okay, good job. Appreciate it.
Yes, sir.
And do y'all know anything about WMA?
Weighted.
There's WMA.
The weighted moving average, like the volume weighted moving average.
Yeah.
Yeah.
There's the SMA, the EMA, and
Mm-hmm.
but yeah, I use I was just telling Rams, we just had this conversation, but yeah, there's the weighted moving average, and there's simple, then there's the exponential. But I was just telling Rams, what, like yesterday or 2 days ago, that I use for my lower moving averages, I use the EMA because I want my lower moving averages. I understand the short term trend and the the momentum and stuff. So I need those to be sensitive to price action. So I use the EMA. Whereas though my 20, my 50, I use as support or resistance. My 100, 200 support and resistance, I want those to be my EMA because I don't want them to be sensitive to price action. So it's all about what you're trying to do, your strategy. So SMA is for the higher moving averages for me, just because I use them, my moving averages, as targets and support and resistance. So that's how I do it like that. My 5 is EMA, my 10 is EMA, my 20 is SMA, my 100 SMA, my 200 is SMA. Or moving averages, those amazing topics. Definitely gotta know what they do.
Right.
But you gotta get out of here now, right? Right? I'm about to.
Yeah, I'm about to start wrapping it up.
Or same.
Yo, peace and love to everybody, bro.
Guys, thank you. Thank you. It was a
Appreciate it.
good one.
Good
Facts.
one.
Thank you for everybody for joining. I hope y'all have an incredible day.
Thanks.
It's
Have a good
Friday.
weekend.
Thank you.
See
All
ya.
right, see you all.
Enjoy your day, man. Smile, be happy. Enjoy life. Life is beautiful. I don't know where y'all at. Where I'm at,
You
man,
too.
beautiful over here. The sun with the sky and stuff. Man, just serve others. Make sure you pray. Don't forget about the Most High, and just smile even when it's hard. Just keep going, thugging it out. He gonna make it easy for you soon. Um, enjoy your day though. Have a blissful day. Leave everybody with the words of the highest human act that we can all possibly achieve is to inspire others. That's why I love this space that we got. inspiring others. None of us is better than we might be better in one type of category, but we're not better as humans though. We all equal. And then would you rather be at war with yourself and at peace with the world, or at peace with the world and at war with yourself? Be at war with yourself, man. That's the best thing. Don't be afraid to sit in the dark. Most people are afraid to sit in the dark with themselves because they can't face themselves. That's the worst thing. That's the worst enemy is yourself. So sit in that dark, man, with no TV, no noise. Just sit in that dark and face your fears and literally dig into what your thoughts and stuff. That's how you find yourself, man. You sit in that dark with no noise, filter everything out. And I'll leave y'all all with peace be upon you. And in Arabic we say assalamu alaikum. Have a blissful day, because I will. And I hope y'all will. Thank you for your time now.
Bless.
Thank you.
Peace to the gods, peace to the gods, peace, love, light, and hell upon everybody on here.
Thank
Peace.
you.
Peace.
Peace. It's fire.